Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, I'm Teacher Tony. Today, since Tong Wei went to the south to give a lecture and might not make it back in time, I'm filling in for him. If you like Teacher Peng Rei's, the young heartthrob will be back tomorrow. So for today, please bear with this old guy for a bit. Since we're using a backup system, the connection was a bit late just now. If you have any questions, please let me know in the chat room and I'll check if there are any issues. All right, let's wait for everyone for a bit. Hold on a second. Let's take a look. All right, so there are no issues right now, so let's get started. First, let's talk a bit about this survey. Actually, the reason the market cooled down yesterday was because there were just too many people against it. Let's chat about this for a bit, and then look at how the sector rotation in the US stock market is still ongoing. The US corporate earnings season has already started to heat up, so today's content is quite rich. All right, let's move on to what our company is recommending. All right, so let's take a look here. The first thing is, mainly on Sunday night US time, which is Monday morning in Taipei, we saw the news that Powell himself recorded a video saying that the US Treasury Department they will issue a subpoena to the House Speaker, and the threat is that the content is related to testifying about the renovation project, and they are hinting at criminal prosecution. What's different about this is, as we can see in the green text below, the part in quotation marks is actually what Powell himself said. He said it personally. So this is a bit different. Let's look at the next page, because Trump's criticism of Powell, as well as criticism from the Republican Party and some other people actually, has never really stopped. But the thing is, Powell has generally maintained a rather passive and accepting attitude, so he hasn't really fought back much. But this time, after receiving the subpoena for criminal charges, he actually unexpectedly chose to confront the issue head-on, and then accused the president of trying to seize his authority. So about this part, we'll see everyone's reactions in a bit and then discuss the possible reasons for it. We'll have to keep watching for further developments. But what we want to tell everyone directly is that this will have an impact. It's kind of like talking about electric socks, you know? This. Trump wants to take control of the Federal Reserve, but ironically, because of this indictment against Powell, he might not be able to do it. So why is that? Let's talk about the first reason. The Federal Reserve has its own mechanisms. For example, you have to first become a member of the Board of Governors before you can become the chairman of the board. Everyone should be aware of this. If you are appointed as a governor, then the members will select a chairman from among the governors. So, as for this, generally speaking, the chairman has a term of office. For the governors, each term is 10 years. For example, when Trump took office in 2018, the term for his appointed governor was until January 2028, either January 30th or 31st, so until the end of January. Now, you should know that the US president's inauguration is on January 20th, so Powell's term as a Federal Reserve governor isn't that much longer, just a few days longer than Trump's term. In other words, after finishing his term as chairman, he can continue to serve as a governor. So, of course, if he stays on as a governor, well, generally speaking, the usual practice is that after the chairman resigns, the governor will also step down. But the problem is, if you start criminal proceedings against him, then Powell will be even more likely to stay in that position, right? He needs to protect himself. So this is a big problem. And if he remains as a governor and the new chairman comes in but can't win everyone over, then there will be a group of people who still side with the former chairman and oppose rate cuts. So the majority of officials at the Federal Reserve have this kind of attitude. While they're not absolutely against cutting rates, they definitely want to see the numbers before making any adjustments to interest rates. This is pretty much the approach that people with PhDs or other professionals after their basic training will take. That's just how it is. It's actually quite difficult to just cut rates recklessly like Trump did. That's a big issue right now. The Trump camp, Trump's team, is currently suddenly launching such a strong attack against Powell. In fact, this might actually make Powell choose to stay, because I think, privately, when talking with colleagues, I think it's possible. Actually, there might be a bit of tacit understanding, like whether Powell will cut rates before his term ends in May, or what kind of signals he might send. I think on the Biden side, they've probably already reached some consensus with Powell. All right, because you have to remember, right? Previously, the Biden administration actually mentioned once that the Fed should continue to cut rates. Although, well, it's unlikely there will be a rate cut at the end of January, you have to keep in mind that there are still 2 more opportunities for rate cuts in March and April before Powell steps down. The Fed might not cut rates right now, but they can signal that more rate cuts are coming in the future, and that alone would help the market. Actually, it's not just the financial markets. What's even more important for Biden is the yield on U.S. Treasury bonds. He wants to lower the government's borrowing costs, and that's his top priority at the moment. So this part is actually, on Sunday night, he called Trump. Now, this is actually a bit unusual, because normally these kinds of calls only happen on weekdays. Usually these calls only take place on weekdays, so making a call on Sunday night is definitely out of the ordinary. He has 2 concerns. The first is the impact on the financial markets. Whoa, don't let yourself be misled by just one day's movement in the stock market yesterday. The most important thing is to watch how things develop going forward. There has to be some sign of softening, like not pursuing criminal charges against Bauer anymore. Only when language like that comes out will people believe this is truly over. And then another thing is about the new chairman. It's essential that they don't confirm whether Trump can nominate someone, but also don't confirm it outright. This confirmation process might run into some trouble. Whoa, and there's definitely a reason why we're saying this. Why? Because a lot of Republicans have already started to make their positions clear. And this time, we have to talk about something really unexpected. Usually, when things like this happen, it's the Democrats who come out to criticize the Republicans and Trump. But this time, it was really surprising. Right when the news broke, the very first person I saw was Tom Taylor. This senator came out and made a statement, and then you'll see that most of the people we're about to show you are actually these Republican committee members. In fact, it's the Republican members who, regarding the government shutdown and, well, this situation. After the Venezuela incident and the ICE enforcement issue, and a series of other things, I feel like the Republican lawmakers are starting to lose control a bit. Everyone is under a lot of pressure because of the upcoming elections, so their opinions are being expressed more directly. In the Senate Banking Committee, their reasoning is really just to say, he made a very interesting statement, a statement with a lot of depth. Why? He said that before the legal issues at the Department of Justice are completely resolved, he will oppose confirming any nominee for the new Fed chair. This actually makes things very clear, and it's important. Why is it important? Some senators are indeed more important than members of the House, but the key is that senators are even more important. He's on the Senate Banking Committee, and what does this committee oversee? It just so happens that it oversees exactly this. The appointment of the chairman of the Liaison Committee needs to be confirmed, so it just so happens that he's in there and has a vote. He's the last vote, you know? This is a really big deal. Then there's another one, the Senate Republican leader. This is most likely a party-appointed position. He's also a veteran senator, and he said that this investigation needs to be resolved quickly, and he also mentioned that the confirmation process for the chairman of the Joint Committee will face challenges. Because after something like this happens, just think about it. Of course, the Democrats won't support it, they'll be on the opposing side. But when a lot of Republican senators also have strong opinions about it, this new candidate for the chair of the review committee, no matter how outstanding they are, will face a ton of questions, especially after this incident. I'm telling you, the confirmation process is going to be extremely troublesome, because everyone will be ready with lots of questions to keep grilling this new candidate. I don't know if this is Trump's idea. If it's not Trump's idea, then this time Trump has really run into some terrible teammates. It's a very troublesome situation. Also, the chairman of the Senate Judiciary Committee, Chuck Grassley from Iowa, he also said that it's best if this investigation isn't politically motivated. That was pretty unexpected too, as you saw. He said that it's best if this investigation isn't politically motivated, but this person is a Republican. He's not a Democrat, and then he expressed support for the independence of the Federal Reserve. Okay, let's look at another point. Republican Senator Jim Justice from West Virginia demonstrated that this looks like a completely pointless brawl. Isn't this already pretty bad? And then there's John Kennedy, a Republican senator from Louisiana. He's also involved. As a member of the Senate Banking Committee, he has already warned not to let a feud break out between the Federal Reserve and the executive branch. This is pretty obvious. You can see he's setting up the Fed against the executive branch, but in reality, the Fed wouldn't proactively sue anyone. It's actually the executive branch that's taking the initiative here, so this is already a very strong signal to Trump, basically telling them not to mess things up. So we want to make this clear to everyone. The reason why the market seemed to downplay the situation yesterday is because the senators made strong statements. Of course, after a day, even more people have spoken out. All right, let's take a look at this first. 3 former Fed chairs and 4 Treasury secretaries have come out in opposition. The former chairs, whom everyone is familiar with, Yellen, Bernanke, and Greenspan, all voiced their support. Then, during Obama's term, Treasury Secretary Geithner and Jack Lew, during George W. Bush's term, Treasury Secretary Henry Paulson, and during Clinton's term, Treasury Secretary Robert Rubin, all came out to show their support for the current chair. They all made statements expressing their support. So, another point is that central bank governors from around the world have also come out to support Powell, including the heads of the European Central Bank and the Bank of England, who have both expressed their support. The independence of central banks is the cornerstone for ensuring price stability, financial issues, and economic stability. It serves the interests of the public. These were some of the things they said. But you have to understand, why is this the case? And why was this joint statement issued in the name of the BIS? Why did the Bank for International Settlements and everyone else come out to speak on this? Now, as for this matter, Trump might not care what the international community says, but the US is the US political scene. The financial elites will definitely have opinions about this. Why? Because the US dollar is the international reserve currency, and everyone faces the pressure of clearing and settlement. Unless your currency's independence is compromised, then let me ask you, won't there be people who question you, saying, why should I just blindly trust you? There will definitely be doubts about the status of the US dollar as a reserve asset and a reserve currency. This is a big problem. If this situation becomes really deadlocked and things start to shake, that's shaking the very foundation of the country. So when you look at it from this angle, you realize this issue is much bigger than what Trump imagined. Seriously. Of course, there are also people in the American business world trying to escape together. And then, even funnier, this morning I saw that the army of retail investors in private sector stocks came out, all yelling and calling for Daddy to run. Honestly, I don't post on that forum, so I don't really know about this. This reaction, you know? Basically, private sector stocks used to be more pro-Trump, more supportive of Trump, and more against Biden. But now you can see that some people have already started to switch sides, so to speak. Of course, Daddy Bauer isn't really that great. It's just that when Bauer cut interest rates before, some people benefited. That's pretty much the idea. But what we're trying to say is that from senators who have the right to vote to the former Fed chair and the Treasury secretary, and then the heads of central banks around the world, as well as industry leaders and even retail investors, everyone is coming out and making their stance known. So I think that's a bigger issue. And of course, now let's take a look and try to balance things out a bit. President Trump did not instruct the Department of Justice to investigate Fed Chair Powell. Now, whether he did or not, we don't really know, but I think here we can probably just let it go for now, since actually, although Trump did mention it, he brought it up once before, he never really gave a direct order. But after he said it, some people might have tried to interpret his intentions, which is possible. And then on the other hand, there were previous reports because the head of the FHA, Bill Palute, he's the founder and chairman of a real estate company. So, of course, when he took this regulatory position, people said that earlier he was involved in the Lisa Cook loan fraud case. That case is going to court. So naturally, people immediately started to suspect whether he was going to incite or obstruct anything, but on Monday he stated that he had no knowledge of this matter at all. So it seems like it isn't worth much. Then there's Attorney General Barr. Previously, he had disagreements with Trump over whether to release the Patriot Act investigation files, so things weren't exactly smooth between them. This time, he chose to keep quiet at first. He didn't say anything, didn't comment. But in theory, the other party who saw and issued this subpoena is Miss Piero, is a woman. She didn't seek approval from her superiors at the Department of Justice before issuing this subpoena. Now it's come out that she doesn't intend to give up her right to pursue this investigation. This Piero is actually quite interesting. She used to be a host on Fox News, and about 5 months ago, she was appointed as a prosecutor in the District of Columbia, so in D.C. The Federal Reserve is an institution within D.C., so it's under her jurisdiction. Now, don't think that just because someone is a TV host, they can become a prosecutor. Most likely she has a law degree and qualifications, and then became a TV host. We also have lawyers in Taiwan who go on to host TV shows, so this isn't really a strange thing. Now, since she was seen on Fox News, what is her stance? Well, everyone knows that. As for whether Trump benefits from this, we really need to take a closer look. So this is quite a controversial issue. I think it's possible that she really didn't get involved. Communicating with those above and then thinking to himself, I'll just go ahead and do it my own way, that's possible. But the problem is, after this matter was exposed, the question is how it's going to end or be wrapped up. That's a big issue. Of course, today, we're talking about the independence of the original association facing challenges, so the market's discussion about gold prices moving toward that round number threshold is heating up. So yesterday we saw that the stock market went up, but the stock market wasn't really hit by this negative news. Then the bond market rose, and after interest rates went up, they fell back again, ending with a slight increase. But the issue is, whenever there's any wavering in confidence about monetary policy, or the US in general, we traditionally see gold start to move. And then, basically, now, in this current atmosphere, gold moves as soon as there's any sign, and it moves even more aggressively. So, what we want to talk to everyone about here is that, for us, the thing most closely related to the stock market is, of course, the outlook for interest rate decisions. Here, it's very clear that expectations for a rate cut have obviously declined and been pushed back. Why do I say this? Because previously, the expectation for a rate cut in June was over 1, meaning the market was 100% certain there would be a rate cut by 1 notch, even though there might not be any movement in March or April, and that's still uncertain. When it comes to June, people thought that after the new chairperson takes office, there would probably be a welcome rate cut. There should be that kind of atmosphere, and then, looking further ahead, by December, if I remember correctly, after around September, the probability of a rate cut had exceeded 2 times. In other words, from a trading perspective, there was still an expectation for 2 rate cuts this year. But here you can see something important. The probability of a rate cut in June has dropped. It dropped to less than once, and it won't be until July that a rate cut of more than once is expected. Then, by December, the probability of more than 2 cuts becomes possible. The previously more optimistic atmosphere has actually been tempered by this development. Alright, but this situation isn't over yet, so please keep watching closely. So if the US stock market has been more volatile in the past few days, this is one of the reasons why. So if you ask me, I think this is counterproductive. It's possible that Powell really, as the chairman of the Federal Reserve, is just... Once his position is confirmed, the chances of him remaining as a board member increase. I think Powell himself is a lawyer by training, so don't think he doesn't understand the law. It's possible that he's waiting until all the charges against him are officially dismissed before he's willing to step down from his confidential post. So actually, this is a challenge for Trump, who wants to take control of the Federal Reserve. It's quite a headwind, like shooting yourself in the foot. Even if the stone isn't that big, whether he moved it himself or his friends did, if it lands on someone's foot, it's definitely Trump's foot. So yeah, Trump hasn't been in a great mood lately, which is understandable when you look at all this. Okay, now let's take a look at the economic data that's going to be released on Wednesday. Quickly, let's look at the first one. Actually, it's being released today. The Small Business Optimism Index has already been published, and it's gone up from 99.0 to 99.5. All right, now for the more important stuff. It's not the ADP employment change, Now, after the Department of Labor's weekly jobless claims numbers have become more consistently and stably reported on Thursdays, the significance of the ADP report has decreased. What people care more about is the month-to-month change. Besides that, the most important thing tonight is the December CPI. The market expects it to increase by 0.3 at the end of the month. Why isn't there a previous value? Because the government was shut down, so there was no data released for November. Sorry about that. Also, looking at the year-over-year CPI, the position seems to be similar. It's about the same as November. The core CPI should be slightly higher, and 2.6 or 2.7 is actually quite aggressive. You can't really call it heating up. The expectation is that it will be about the same. If it's lower, that would be good news. After we finish talking, we'll go back and take a look at the actual numbers when they're released. As for new home sales numbers, I don't think the housing market is the key focus for the market right now. Our main focus today is the CPI, and then tomorrow it's the PPI. So we still need to talk to everyone about sector rotation, because from 2026 to November 12th, wait, it shouldn't be just 12 trading days. It's only 12 days. I remember there are 7 trading days, so you can't really outrun it. What's surprising is, today we want to talk about something that was very strong last year, but hasn't performed this year. So here we need to look at what's happened so far this year. The biggest gainers are materials and industrials. One is up 7.2%, that's materials, and industrials are up 5.2%. In a bit, I'll introduce some of the things driving materials in the market. As for industrials, it's mainly the defense industry that's been strong in the stock market, so that's had a positive effect on the rise. Now, in addition to that, when we look at essential consumer products and services, the broader energy sector, as well as various other industries that are currently impacting the market. Non-discretionary consumption is also on the rise, and core consumption is also going up. So after we sorted it out, these 5 are basically the main categories in the S&P. Just wanted to mention this to everyone. Why bring it up? Because this gray area, the 3.39, that's what's called consumer staples. This is kind of like utilities. Usually it doesn't surge much. But it won't surge. Instead, it represents a kind of slow warming of the economy, or that prices are gradually shifting. There are some changes happening. So I wanted to let everyone know, and in the future, I'll accompany you during my live streams and guide you to see what opportunities might be here. Now, moving on, let's take a look at the fourth quarter of last year. The biggest ones are healthcare and communication services, the 2 green and blue ones. Those are these 2 categories. Now, what we want to talk about is why, because within communication services, there are basically the Magnificent 7. Today, what we want to share with everyone is how we look for the structure of the Magnificent 7, and starting from October 1st in the fourth quarter of last year. Actually, if you look at the end, the ones that rose the most weren't information technology or among the 3 sectors that the Magnificent 7 belonged to. Only one sector saw a bigger increase. In fact, healthcare went up more. We saw that healthcare had a bigger increase, but this year it hasn't been the top performer, nor has it outpaced the overall market. What we want to point out is that there is actually some rotation happening. But in the second half of last year, among the 11 sectors, the one with the biggest increase was telecommunication services, followed by information technology. This is where the main part of the Magnificent 7 that you're familiar with falls. So you see, in the second half of the year, the biggest gains were mainly in the 2 sectors within the Magnificent 7. But after the fourth quarter, only one sector among the Magnificent 7 saw gains, and then at the start of this year. If you look at the Magnificent 7 stocks, you'll see that other sectors are actually performing well instead. This doesn't mean the Magnificent 7 have no chance to perform, but rather that their performance is now more divided. In the past, you could just blindly buy the Magnificent 7 and then just count your money, but those days are probably over. Alright, let's take a look. Right now, Google is relatively strong. Today, in this sector, we still want everyone to look for the stronger stocks. And hopefully this will spark some trading ideas for everyone. Alright. The first one is Google. Of course, its fundamentals are looking pretty good, so that's why it's trending upward. Then the second one, here I'll just briefly mention NVIDIA. Hold on a second. There's another strong one in the semiconductor sector, which we'll talk about in a bit. As for NVIDIA, let's discuss that part now. It looks like it's fluctuating at a high level with a slight increase. As I said before, my view on NVIDIA has always been for your reference. It can consolidate, just don't let it drop sharply. I'll say it again. NVIDIA can consolidate, just don't let it crash. That's very important. As for Broadcom, last Monday it went up. There's a line missing here, which is the 100-day moving average. Actually, yesterday, it should have climbed back above the 100-day moving average, so that's a more positive sign. AMD was also quite active. Last Monday, it went up by 22.22 points. Now, today, hold on, since I'm using a backup device today, I don't have my usual setup, so I can't show you the screen, but I do have my laptop with me. I just can't display what's happening for everyone. Both AMD and Intel performed well today and went up, mainly because of some positive reports from brokerage firms. They raised their target price, so that's why it performed well. As for Tesla, it's been fluctuating at a high level. Now, let's talk about this. Honestly, Tesla's electric cars just aren't doing well. They're, after being overtaken by BYD, honestly, it's going to be really hard for them to catch up again. Why? Because the profit margins just aren't high enough, and Americans usually aren't that interested in things with low profit margins. Electric vehicles won't be their main focus going forward. The next big thing might actually be SpaceX. Although, to be clear, SpaceX isn't directly owned by Tesla. It's owned by Musk himself. But there have been discussions about whether Tesla should invest in SpaceX to some extent. If SpaceX is brought under Tesla and then goes public, we still don't know how that'll actually play out. Let's just keep watching. We're just saying that this is still a topic that's being discussed. Next, we'll also be seeing corporate earnings reports, so let's wait and see what is said at the upcoming earnings calls. As for Amazon, it also dipped slightly yesterday, but you can see it's basically consolidating in the middle range. Apple, on the other hand, is also consolidating at a high level. Earlier this year, it actually took a hit, which was pretty unexpected. Okay, so what else is important about Microsoft? The key thing is that Microsoft hasn't been going up, and it's still below the 200-day moving average. This is something to pay close attention to. Until it gets back above the 200-day line, you need to be cautious. It's not about being pessimistic, but just staying alert. As for Facebook, it's really not doing well. It's dropped again. So aside from the recent news, there's not much positive going on. They're making adjustments to their workforce, and they're also restructuring the Metaverse division, making some cuts and changes there. In addition, they're doing some reintegration on the infrastructure side. But while they're reorganizing their layout, it seems like the stock price is also stabilizing. Now, as for Oracle, let's take a look. On Monday, Oracle stock went up. The key point for Oracle is, well, Nvidia can fluctuate. That's fine. But for Oracle, the main thing is that it shouldn't drop any further. Yes, there are indeed some issues, but in terms of market confidence, people really don't want to see it go down. It would be best if it doesn't drop further. Hopefully it can stabilize for a bit and then wait for some kind of turnaround in its business operations. Now, regarding Micron, oh, sorry, I didn't include this. This is actually the index for the Magnificent Seven. Micron still had a big jump yesterday. And sorry about this. I didn't update this page on Bloomberg today. Sorry about that. Now, SanDisk, actually its stock was pushed up by Micron. You can see it's still rising. So what we're saying now is that there are two things that are most certain at the moment. One is memory, and the other is the demand for semiconductors. These two are actually very, very certain right now. Some people are even saying that SK Hynix's profits this year might surpass TSMC's. All right, but let's not be so negative, like saying it's impossible or whatever, okay? Because with memory, it's just that crazy, you know, you just have to laugh. When memory is doing well, it's like a shop that hasn't opened for 40 years suddenly opening up, something like that. So if you want to look at the future, you should focus directly on Micron and SK Hynix. These two have the highest purity and the strongest technology. They're the absolute core players. The concept here is HBM4 memory, okay? Now, because Samsung has too many things within its group, you know? So here, as you keep watching, you really need to maintain a strong position. Also today, besides the 7 giants, we're going to talk about another group you can look at, some other sectors. The first one is Freeport. This is considered the largest peer company in the US. Now, although internationally it's not the biggest in the industry, it's the only stock of its kind in the S&P 500, I think. So you can see Freeport surged 3.86%, and London Copper has already hit 13,000. This basically speaks for itself, right? Why? Well, let me explain a bit. Both the US and China have each established what they call a strategic asset list, which includes copper and nickel. All of these have been included, so you can pretty much figure out what's going on here. The key point here is that these are essential, fundamental raw materials. And what's most important, it's the spot goods that matter. You have to understand if it's for industrial use or for strategic military purposes, what they need is the actual physical goods, not financial assets. Sure, there's nothing wrong with financial assets and their prices can go up, that's true. But what everyone is really looking at is how many kilograms or how many metric tons I actually have in my hands at this point. Now that's incredibly powerful, isn't it? Another stock to mention is Newmont, which is a gold mining company. It's probably the only gold miner included in the S&P index. All right, so this one, actually, it shouldn't be included in the S&P. So what we're talking about here is gold mining. Gold prices are still rising, and why are the conditions still favorable? It's simple. The independence of the Federal Reserve has been challenged, so there's renewed demand for gold. Just wanted to share that with everyone. This is also a spot concept stock, meaning you need to actually have the physical gold in your hands, whether it's a few ounces or a few metric tons, for it to really provide a sense of security for the country. So that's another point to consider. This is a stock that everyone can pay attention to. Now, moving on, this one is Albemarle, which might be a bit less familiar to everyone. LB, this company, also went up by 5% on Monday, almost 5%. Why? Because it's the largest lithium mining company in the United States. Again, if you want to make electric vehicles or energy storage, lithium always plays a role in these areas. So you see, this one is also very strong. Now, there's something else I want to mention. Oh, let me add one more here. There's a company called Bloom Energy, which has been really strong lately. This is worth paying attention to, and let me tell you why. On Monday, it went up by more than 2%. The main thing is they have a solid oxide fuel cell, or SOFC technology, which is semi-solid state. One of its features is that it can be installed on the client side as a generator that's not a regular electric meter. So, for example, in a data center, this is really important. It uses an electrochemical reaction, not combustion, to convert natural gas or biogas and then hydrogen into electricity. It's a bit complicated, right? Honestly, it's hard to explain, and I don't really understand it myself. Just imagine it as a private, small-scale device that can be set up next to equipment to generate electricity and provide a power source. So last night, Trump made a move. He said that Microsoft is going to start, to do some planning for electricity. The main reason is because data centers, when you build those things, these tech companies are really happy to do it. But the problem is, if you compare this to regular residential electricity use, like in a hospital ward, if you have a huge electricity-hungry monster sitting there, it'll use up all the power. And when the electricity is used up, what happens? The prices go up. And after the prices go up, what happens? Voters get unhappy. So that's why Trump has already started talking about this for the sake of votes. You can pretty much tell that this kind of thing, including nuclear power, will be a short-term topic. Meaning, in this AI-driven environment, this group will keep getting attention. It's just that the pace is too slow. But before nuclear power really gets hurt in the short term, it's very likely that things like blue energy or energy storage will gradually start to shine. So what I'm telling everyone here is just to introduce this concept that's heating up in the market, and it's being discussed. Now, on another note, recently, it's still been really strong. Of course, what we're seeing here, oh, this is my favorite, called HII. That's because it's the only company in the US that builds nuclear-powered aircraft carriers, and one of only 2 that build nuclear-powered submarines, the third one. Guys love this stuff, so it's also been surging. This is considered part of the industrial sector. So you can see, right, that raw materials and industrials are relatively strong, but you have to dig out the core things inside. And then on another note, L3 Harris, well, it went up a bit on Monday, about 4 to 6%. Let me tell you this. I put this report together in the afternoon. You know, when it comes to money, do you know what news you'll see? It's really incredible. The security news, actually, the real security news, is that the US Department of Defense is going to invest $1 billion in their missile technology. Let me say it again. The US Department of Defense is going to invest $1 billion in their missile technology division. So what's their policy? Why haven't I talked much about them before? It's because they're a systems integrator. Back then, they were kind of hiding behind the 5 major defense contractors, the big 5 being Lockheed Martin, Northrop Grumman, General Dynamics, Raytheon, and... Hi! They stayed in the background because they're the main supplier of systems for things like operational command and communications, so they tend to keep a low profile. But their technical capabilities are solid. The US military's communications capabilities are extremely strong. Honestly, only China is left as a real competitor. Russia is already falling behind. But if you look at their technology, surprisingly, they still can't get certification from the US Department of Defense, so that's something everyone should pay attention to. On another note, let me mention something else. As we can see, although there was a drop on Monday, I think the base price for a rebound in the short term has already appeared. What is this? These are oil field service providers. So whether or not Venezuela's oil will actually be produced is still uncertain. Maybe the bosses in the US are saying it's still not the right time to invest, but then Trump got all worked up and criticized them. Anyway, what I want to tell you is that when you see oil field service provider stocks making a move, it usually means something is brewing behind the scenes. Even if it's not Venezuelan oil, it's probably oil from somewhere else. Here we can see that Halliburton has already started to show some movement. Also, Halliburton's stock name sounds a lot like Harry Potter, so that's why I've remembered this company for a long time. Its competitor is called Schlumberger, and it's also a smaller player. You can see that after the breakout, the trend has started to emerge, so everyone should keep an eye on it. In the end, we're still talking about, well, other sectors are also seeing some action. As for Johnson & Johnson, if I remember correctly, I think it's next week. Seems like it's on the 3rd or so, that they're going to release their earnings report. Let's see if after the report comes out, the stock price can be pushed up. That's the situation. Major pharmaceutical companies in the US, these have actually been performing pretty well since last year. What I want to tell everyone is that there are a lot of opportunities within sector rotation. So the main point I want to make here is that if tech stocks, especially AI stocks, stop rallying this year, you need to look for more niche AI stocks. Stay with those AI stocks that have a real advantage. Also, you should look at some of the new ideas emerging in the market. Try to understand them and get familiar with them. As for the S&P, it had a slight uptick. The top gainers were Digital and Seagate. Seagate did well. Let me mention the parent company of Shengdi is going to upgrade its imports, but in terms of performance, it's still much stronger than the top 10. Also, there's Dekong Medical. As for yesterday, the financial stocks were pretty weak. I can't remember which one for Tongbu Financial, but Yi Capital Financial should be Capital One. It's an independent credit card company in the US, so you might be more familiar with it, which is probably why it's more significant. The main thing is that... Hold on a second. There was a statement made on Sunday saying that they want to put a cap on financial credit card interest rates. The idea is to lower the burden for people who carry revolving credit card balances. This burden, but it's a good idea, but in practice, it will actually lead to a bad outcome. Why? Because the US is a very realistic capital market. The worse a customer's credit is, the higher the interest rate needs to be to protect the financial institution's profits. If you cap the interest rate, then it's simple, the financial institutions won't break the law, they'll just pick higher quality customers to lend to. Of course, this actually ends up being counterproductive. The people who most need credit cards to get through financial hurdles are usually those who are already struggling, the more disadvantaged groups. But instead, they won't be able to borrow money and they'll have to turn to other channels to get loans. And those channels are pretty much like getting hooked on drugs. So if you can't even afford to pay off your credit card here, you'll quickly end up falling below the cutoff line. So while this might sound like a good idea, in reality, it's not a very good outcome or approach. That's why financial stocks were dropping yesterday. But there's still a chance things could turn around. Why is there such a rush? Whether they'll actually go through with it is still up in the air. Because financial institutions have regulatory authorities, mainly the central bank, the US Treasury Department, and the SEC, the Securities and Exchange Commission, things don't move that quickly here. So basically, it still takes time to communicate and coordinate. Also, volatility has started to rebound. The market had a slight uptick yesterday, actually leaving a shadow on the candlestick, which looks pretty good. Another key point here is Goldman Sachs. They should be releasing their earnings tomorrow or the day after. IBM performed relatively well, while the biggest losers were American Express and Visa. Sorry, I mentioned American Express again. It seems like I said it twice. Let me correct myself. That wasn't the one I meant to mention. What I want to say is if you look closely, American Express is a classic card issuer, and so is Visa. So you can see that the credit card companies were really hit hard by what Trump said. They took a bigger hit than others. But the NASDAQ had a slight increase, and as for the Philadelphia Semiconductor Index, the gains in the North were pretty lackluster, not really a strong recovery signal. Every time there's a rebound, it only goes up about 4%, and AMD actually dropped. Qualcomm and Intel also went down. As for the Magnificent Seven, their performance was relatively weak too, which is something we need to talk about. The index only moved 0.03 on Monday. Google went up, Tesla went up, Apple went up, Nvidia rebounded, but Amazon went down, and Microsoft also dropped. Meta had a bigger drop. So as you can see, based on the index, things are pretty much consolidating right now. We've been talking about this a lot. I have mentioned it many times myself, so this is just a trend. The overall market has not turned bearish. It is just that different sectors are rotating, so you need to adjust your holdings accordingly. You should consider making some adjustments. Now, moving on, let me talk about something else. Earnings season is starting again. Tonight, I just checked JP Morgan's numbers, and they're pretty good. There's one small downside. The investment banking fee income was below expectations. The reason for that is because in the fourth quarter, the amount of US bond issuance declined, so that's why that part was down. It's actually better if you look at the first quarter. I remember that in the first quarter of this year, bond issuance increased significantly. It kind of feels like they postponed issuing bonds until the first quarter of this year, so this should have a chance to recover later on. Also, tomorrow it's Bank of America, Wells Fargo, and Citigroup reporting. And as for Goldman Sachs, they haven't officially announced the exact release time. So for now, I'm assuming they'll announce on the 14th. Then on the 15th, it's BlackRock and JP Morgan as well. So the main focus this week is really on these. So with these major financial institutions, next, I'm looking at the number of companies in the Americas. This first week is all about financial stocks. And then next week, for that part, there are 3 times on the 18th, then the 25th, and February 1st, up to February 8th in this week. Of course, there are 88 and 71 companies respectively. Basically, from the 25th to February 1st, and from February 1st to February 8th, these are after the earnings reports. So this July's earnings season should let us see most of the earnings reports before the Lunar New Year. So this will be So ideally, what does this mean? The chances of a market shift before the Lunar New Year will get smaller. And then on January 29th, there will be this annual review meeting. Everyone listen up. Whether or not the market will shift really depends on whether during our holiday break, when the market is closed, there are any changes in the US stock market or in international finance or politics. If something unexpected happens that causes a sudden reversal in the market trend, whether it's a rally turning into a drop or a drop turning into a rally. That's what we're talking about here. So looking at it this way, before the Lunar New Year, all the major earnings reports from heavyweight companies should be released. So this is one uncertainty that will disappear. This will directly affect your decision on whether to hold positions over the new year. All right, in addition, we also noticed that by February, actually we've been tracking this through March, but by late February, there are fewer and fewer reports. Why is that? Let me explain. Currently, only companies with a 270-day reporting period have announced their earnings release dates. Here, the so-called important US stocks, as defined in the book, are not limited to S&P stocks, so it could include some significant companies from the Dow Jones or NASDAQ as well. But the point is, the number of companies with a 270-day reporting period is clearly less than before. Traditionally, there used to be more, but now, unless you include Google or others, that is, unless it's companies that keep investing, or large financial firms, which are relatively few, they'll usually let you know their earnings call date about a month in advance. For mid-sized and smaller companies, they typically only finalize it about 2 weeks beforehand. These numbers will definitely be adjusted, so everyone just wait a bit. They will be corrected later. The main point is, once the Big Seven announce their schedules, you'll see that all of them will be released in a key time frame, before the Lunar New Year. There's a reason for this, and that's because January 29th is a very important day. It points out that Microsoft and Tesla are going to release their earnings reports, but the exact time hasn't been set yet. Based on the information we've released in the past, we expect that the earnings reports will come out on that day, and for the Big Seven, their earnings are usually announced after the market closes. This is different from the financial sector, where earnings are typically released before the market opens. I want to make sure everyone understands this distinction. On the 29th, Facebook, Microsoft, and Tesla will report. On the 30th, it's Apple. Then on February 5th, it's Google, and on February 6th, Amazon. NVIDIA is a bit later, on February 16th, so we'll look at NVIDIA after the Lunar New Year. So for the others, we'll be able to see the main ones before the Lunar New Year. Of course, there are also companies like Micron, Avago, and AMD. If I get the chance, I'll help organize it better, but for now, this is the preliminary summary. Now, let's talk about profit growth estimates. Here, we still see that the information technology sector continues to represent and lead the S&P in terms of profit, but its contribution has started to decline a bit. Its contribution has begun to decrease. It is expected that after 2026, after the end of the year, online earnings will start to decline. This means that, as you can see, this is being reflected now. It's not surprising that the trend is becoming more divided. Why? Because you can see that things are starting to slow down in the later stages, so the strong and weak sectors are beginning to split apart. This is completely normal. Now, moving on. For 2011, we won't make an estimate. We'll look at it mechanically. So after 2025, where do we see better prospects? It's still in communication services and information technology. That's what it is. Then there's also non-essential consumer goods. These are the three sectors where the 7 giants are distributed. Aside from this, the other important thing is financial stocks are still showing relatively strong performance, roughly on par with the S&P. The others might be a bit weaker. I think there will still be some adjustments since 2010 is used as a baseline. This year's wildcard should always be raw materials. This is related to the raw materials sector, because if everyone is scrambling for physical metals, then profits in this area could end up performing quite well. There's another thing I want to mention. After all, we're looking at stock investments, so even though people say it's not about the present, it's about future dreams, we still need to look at the EPA, especially for those who are in it for the long term. In terms of the outlook, the trend is consistent. After all, when you buy stocks, you're really buying future profits. You can dream, but there will definitely be results. At times when there are no profits, don't get too carried away. But whether your dream comes true or you wake up from it depends on whether you can actually deliver. Now, if we look at the long-term performance of stock prices, the earnings of leading stocks and their prices are actually highly correlated. That's why I always tell everyone, when it comes to company financial reports, we still need to look at their actual published results and their future outlook. So it's very important for us to communicate this with everyone. On another note, as for the US dollar, basically, on Monday, it was hit by the subpoena test. In China, the rebound on Tuesday was relatively weak. Then over the past 2 years, yesterday, Monday, there was a slight increase, but on Saturday, the rebound continued. The same goes for the 10-year bond, a small rise on Monday and a continued rebound on Tuesday. But next, let's look at US stock futures. We'll check them out in a moment, but let's stay here for now. Okay, let's take a look at what I have here, what everyone just saw and the situation from the Virtual report. Hey, this slide. As for futures, the mini Dow is back to its previous level. The mini NASDAQ and mini S&P, as well as the NASDAQ, have all narrowed their losses to less than 0.1%. It was around 0.3 or 0.2, so this is a pretty good turnaround. The effect was quick, and it briefly dipped into the negative, so it looks like the market is pretty hesitant today. Now let's take a look at the pre-market performance, which was better just now. Elle just mentioned it. LG Harris wants to share with everyone that the Department of Defense has requested a $1 billion support for the Missile Defense Division. This is a very strong signal. Also, HI, which is another defense company, along with MT, both had their outlooks adjusted today by a local US financial institution. These two events happened together. But ALP, which I just mentioned, Albemarle, the lithium miner, is doing relatively well. VSC should be an energy-related stock. Now, let's take a look. I'll tell everyone, things might turn more optimistic later today, and the reason is, looking at the past 20 years, the top performer in the 20th year is NR7. This company is energy-related and has already risen 1.41% in pre-market trading, up 1.41%. It seems like The gains in safe stocks are relatively amplified, including companies like KLA and Lam Research. Lam Research's increase is 3.56%, which is a good sign. Also, there are some notable performances in healthcare stocks. But defense stocks are still very strong, mainly driven by that $10 billion investment. So this is a positive sign for confidence. Sorry, just looking for some female-led stocks today. It seems like tomato-related stocks have performed better. Also, looking at the new earnings reports, Delta did well, while North and South Airlines were relatively weak because their annual profit outlook is relatively weak, and the pressure has caused a bigger drop. Visa continues to fall, and the back end is also down, as is military technology. As for Charter, let's see what everyone thinks about this one. Network services are doing relatively well, but it's not all good news. Southwest Airlines isn't doing well, and it looks like Delta's performance has dragged down American Airlines internally. Alright, so although it dropped to about 13th place, after the decline it's only about a 1% drop, so it's relatively pretty stable overall. Okay, so that's basically the pre-market performance for today. Also, let me add something. CPI will be released at 8:30, so let's update the CPI numbers now. Month over month from December to now, the overall CPI is 0.2 to 0.3. The core CPI month over month is also 0.2, and the year-end CPI is 2.7. The numbers are in line with expectations in previous periods, and the core CPI figure is 2.6, which is slightly below the expected 2.7 and matches the previous 2.6. So these are all pretty good positive numbers. So that's basically it. It looks like today's data is pretty solid, and the July earnings reports also seem to be in decent shape. As for JP Morgan, revenue is, EPS is 4.63, which is better than the estimated 4.393. Then revenue is $46.767 billion, which is better than the expected $35.2 billion. So both your earnings and revenue are above expectations. It seems like people aren't really concerned about the investment banking fee income being less than the interest income. This hasn't affected the overall performance. The market's reaction seems pretty positive. Also, in addition, next, the stock price is still hitting the upper limit and continues to rise. Everything that should be going up is still moving. Now, let's take a look at everyone's comments. I see a reporter mentioning that even though Nvidia has positive news, the stock price isn't going up. The memory sector has a long cycle. Yeah, this. As for stock swaps, this is a public broadcast, and since you left your comment in simplified Chinese, I can only share and explain a bit. According to regulations, it's not possible for us to. It's just not possible for us to give you that kind of advice here. Maybe over on the members-only channel, there might be a chance to explain it to you. That the ring wasn't explained well. Also, it's very unlikely to cut interest rates before May, so often things don't go as planned. Let me tell you, actually, that's probably not the case. In fact, Trump probably ran into some issues. It should be someone new. As for the nominee, he probably did some consultations among the senators first. That's probably the bigger issue. Now, you're asking if Powell will cut rates before May? Well, that's not certain either. The main thing is the economic data. And then, it's really tough for Trump to deal with Greenland and Iran. He hasn't handled it well. As for those tactics, let me tell you, in principle, that might keep going. Okay, so about gold and silver as physical assets. Let me tell you, there's another idea this year. Anything that's a real tangible asset might be stronger. We're not necessarily just talking about metals. What I mean is, as long as it's something you can actually use, as long as it has strategic value. Now, you see, maybe in the future, it's not just going to be metals. Who knows? So as long as he can bring it up and he knows about it, he'll be able to perform really well. And as for building their own power plants, that's not exactly it either. It's not that they're just building their own power plants because they've already gone out and bought electricity. The issue is they might increase some of their own power generation. This is a common approach because if you take electricity meant for civilian use, that's not a big problem. As for military procurement, since the US military industry, well, you all know the strength of the US military industry is #1 in the world, is that good? Yes, that's the real deal. Plus, the US has major military contractors, and those big defense stocks, they can deliver an entire plane or even an entire warship to you. That's where the real value is. If you're just making a single component, that's really nothing special, you know? In the US, some credit card interest rates go up to 35.99%. That's outrageous. But actually, that's just how the market works. If you're wealthy, you won't be paying 35.99%. For example, if you have an American Express Black Card, there's no way your rate would be that high. It might be 3.099%, right? All right, that's just an issue with how the market works. So let's see if there are any new questions. Today, I'm just filling in temporarily, so things are a bit rough. We can't show our faces and things aren't running super smoothly. But anyway, our team will be back tomorrow. The young guy will be back, so everyone can interact with him again then. If there aren't any more new questions, that's it for our show today. See you all tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.